Hi and welcome back to the Protea Academy YouTube channel. I'm Michelle, and in today's video we are going to be walking through part 2 of how to calculate the cost of making wine. So in part 1 we looked at the key cost elements making up our wine costing, which was raw materials or direct materials, direct labor and overheads. So once we've collated and tabulated all of our inventory costs, we will now need to consider how the wine inventory moves. So the cost flow is your inventory valuation method and impacts your cost of goods sold, your income taxes, as well as balance sheet ratios for lending requirements. So you will obviously choose the one that best suits your production process. But with all of that said, let's jump straight in and take a look. First up, we have the specific identification method. Now, this method involves tracking each item from the time of purchase through to when the wine is bottled. So meticulous record keeping, data collection, and data segregation makes the specific identification method highly accurate. Starting with the calculation of exact juice or wine yields for each varietal vintage, even getting detailed breakdowns to which vineyard or vineyard block, you then track the juice into the individual barrels for each lot, passing and combining as barrels get blended. So very, very specific and detailed as the name suggests. The second method of inventory valuation is known as the weighted or average cost method. Now, when costs are intermingled and difficult to specifically identify, using the average cost method may work best. So using the average or the weighted average cost for consumable supplies like yeast and sulfur or general costs like storage is considered to be appropriate. The third method of valuing your inventory is known as the first in, first out or FIFO method. This method assumes that the inventory moves in such a way that the oldest stock, so the first in, will be sold first, so first out. LIFO, on the other hand, is our fourth method of valuing our inventory, and this is last in, first out. Now, as you might guess, this assumes that the newest inventory items, so the ones that came in last, will be the first to be sold. This is, however, unlikely the case when it comes to the wine industry, since it is your older vintages which will typically be sold before the newer ones. So which method is commonly used in wineries? Well, you will generally find that the specific identification and FIFO or first in, first out methods are the two that are most commonly used. If you were using LIFO or last in, first out for tax purposes, you are required to use it for financial reporting purposes as well. Now, this can be achieved while still using the specific identification or FIFO method by recording a LIFO reserve on your books. It's important to note that recent changes in the tax code for expensing of certain winemaking costs have taken place, so consulting with your CPA would be useful when it comes to this. Now, regardless of the method of inventory valuation that you employ, you need to remember that it must be applied consistently. So this is important because consistency is a requirement for US GAAP reporting, and it also makes spotting errors a lot easier. Now that we know what methods of inventory valuation are available to us, as well as which costs go into our cost of goods produced accounts, we will be able to calculate the cost of making our wine. As always, we trust you found this content insightful, and should you have any thoughts, comments, or suggestions for future content you'd like to see, please feel free to pop that in the comment section below. Please also join us on our social media platforms, including LinkedIn and Facebook, as well as at our website at proteafinancial.com. Protea Academy, striving to achieve better accounting for everyone.